So this panel, as I mentioned, it's really about how AI is helping companies be much more efficient when it comes to managing risk mitigation and personalization. So, we touched on some of those topics with some of the case studies, but we are using this panel to go a little more deeper into some of these things. And so we've assembled a great group today. Thank you, everybody, for coming. And I'm going to ask everybody to introduce themselves, what their role is at their enterprise, and a little bit on their background. So that would be great. And maybe, Rod, you can kick us off.
Great. Well, first of all, it's great being back here at MIT. Before going to MassMutual, I was with Mitimco, the investment arm of MIT. My name is Rod. For those of you who don't speak Arabic or Farsi, it means thunder. I'm an immigrant. I went to UC Santa Barbara undergraduates, computer science, Harvard master's computer science, studied machine learning, believe it or not, a long time ago. Was there when Les Valiant issued the theory of the learnable a while back. I then spent a lot of time being CIO and CTO at established companies like Eaton Vance in the investment management industry, as well as startups like Endeca. And Steve Papa, definitely listen to him when his time comes up. I'm now head of AI governance at MassMutual. It's a life insurance company established in 1851. And now that you see that, bring a multifaceted view, hoping that I could convince you that governance 2.0 must play a role in addressing the challenges that we have.
So what's your charter of AI governance? Like, what does that mean?
That means making sure that the use of AI is done in a responsible manner. So we have a principle-based approach to do that. That's very agile. We are a peer organization to data science and the business areas, and work collaboratively with the second line of defense.
And who do you report to?
I report to the head of privacy, data, and AI governance, which is a new way of really thinking about these various streams that are usually siloed, but that's the future of governance, is to integrate these things and not to think about them separately.
Do some of your peers have similar people in those organizations as you, or is MassMutual kind of unique?
There are a few organizations that are moving in that direction, but I think everyone should move in the direction that we are in.
Yeah, clearly. Dave touched on that this morning. And how did MIT's endowment do after you left?
It's a fantastic group of people. It's still
some people in the room here who probably have a little stake on that.
Yeah, it still funds, of course, not just the budget, but the 401k, and also all the new buildings that came up really are because of the fantastic group there at.
Wow, excellent. Well, good. Our next panelist from Wells Fargo is Swarup. Pogalur. How are you?
Very good. Thank you for having me on this panel. Just by way of introduction, I run digital and innovation engineering at Wells Fargo. I have a broad portfolio of application development and innovation kind of portfolio that I support, and applications that I support are kind of high volume, high touch kind of capabilities. If you think about authentication, identity, customer contact, and also some capabilities that are enterprise scale. When I think about AI and ML, there's an applicability of it, but there's a core foundational engineering that needs to be in place so that, be it in the governance space or any other line of business product that needs to embed these practices, we are building that engineering capabilities that can be plug and play. So that's kind of my charter here. I've been at Wells Fargo just over 4 years. Prior to that, I've worked with Walgreens Boots Alliance, a similar charter, just in the retail space. And I see a lot of my prior colleagues and friends from American Express, where I spent most part of my, I would say best part of my adult life there. well over 15 years there. And that kind of gave me a lot of the, I would say, foundations to how that company was run. Amex, it's a closed loop kind of a financial services provider, and that was a data-driven company. Even before like the way AI is treated today, it was just intrinsically used in that company, and that's something that I carry with me, just how I approach problem solving.
Got it. So is it fair to say that you're kind of the hired gun internally to solve some of the bank's digital needs?
Correct.
So
I mean, even before something like Just Call Sol became popular, it was always like Just Call Swarup was like a big thing for me. I was like the problem solver for big things.
Got it. So startups here would be competing against your organization because it's a make versus buy, or can you work with startups too?
No, we partner with them. We make them more enterprise ready. Like that's kind of my charter to kind of work with them to see what is feasible, where are they off the rails versus like where are they on track. And also I think the biggest thing is like how do you make that make versus buy decision cycle faster? I mean, today it runs into months and years. We want to cut it down to like weeks and months.
Got it.
So that's kind of the charter. Right?
Okay, so that's really cool. Good person to know if you're looking at this type of use cases. So we'll come back to more questions. Let's go, Catherine. How are you?
Good.
Thank you for coming.
Absolutely. Thank you for having me. So I'm Catherine Havasi. I'm always thrilled to come back to MIT, where I have spent quite a bit too much time. So I think this panel is interesting because it's risk mitigation and personalization, and sort of my career has ping-ponged between the two. And until this panel, I never really thought, what is the commonality between the two? And I think the commonality is that they both really deeply involve understanding people in order to do them well. So I have a kind of diverse background. I do natural language processing, including doing a lot of research here. I ran the digital intuition group at the MIT Media Lab for some time, and spun a bunch of companies out. First one was called Luminoso. It was in customer care and customer service automation. And then I did a company that eventually became a communications compliance company. And that's how I joined a company called Basis Tech, which makes a product called Rosette, which does financial compliance for KYC, AML, that kind of stuff. And we merged about 2.5 months ago with a company called Babel Street, which provides data for risk applications. So now we have the KYC plus the data, and I think that was the thesis. But for me, I'm really interested in how humans and computers work together, and how to use emerging technology to solve actionable business problems. Right? I'm an NLP person, so I'm thrilled that we're in the point where people actually now believe in natural language processing, and where the hype cycle is finally at natural language processing. So yeah, excited to talk about this.
How big is Babel Street, this combined entity, and like who do you target? Like
We're about 250 right now, and we're kind of inside a lot of things. So I remember growing up, there was a company with an ad campaign. We don't make the products you buy. We make the products you buy better. So we're sort of inside a lot of stuff, right? We're one of the top sanctions, compliance, and name vendors. We're inside of things like Refinitiv World Check, a whole bunch of other things, where essentially if you have two entities or two organizations, can we figure out what's the probability these are the same person? Is this person someone who is what we call a PEP, or a politically exposed person? Is this somebody who is sanctioned? Is this an organization that maybe has an ESG violation? You don't want to work with these people. Can we check your vendor? Can we understand what the probability is that they're on a bad list, or look in the news as a whole and say, do you want to work with these people?
Got it. I can see the risk mitigation, personalization thing. Pretty good. At the end here, we have Kunal Tangri, who's working on a very exciting startup. And I wanted to bring a startup on the panel as well. And Kunal, maybe you can describe your background and what you're doing.
Yeah, of course. So I think I'm the startup juxtaposition to the rest of this panel. But I'm president and COO of Farasight. And at Farasight, we are using cutting-edge AI to hyper-personalize the e-commerce experience without a reliance on third-party cookies and with an emphasis towards user privacy. Now, before my time at Farsight, I spent time at Hugging Face, which is the open source hub for all things machine learning. And while I was there, I advised companies like Bloomberg, like Samsung, like Johnson & Johnson across industries on best practices of leveraging AI for their business challenges. So got a really good bird's eye view of the different challenges and applications across industries that people were leveraging and finding with AI. So before all of this, I actually studied NLP here at MIT itself. So I'm really excited to be back here today to talk about it with all of you.
Mm-hmm. Terrific. All right, let's go ask some questions. I think the TIA panelist, our case study, talked a little bit about some of the headwinds he was facing in his previous careers of getting AI deployed, and it was around the quality of the models and the accuracy around the models and the biases and all that. Is Alex Amini here? Maybe. Alex is working on a really cool company dealing with those exact situation and problems. So let's talk about risk mitigation and MassMutual. What are some of the biggest concerns and the pain points? I want pain points and opportunities that need to be solved to address risk mitigation at your firm.
Yeah. So let me just frame things. So we're in life insurance, old company, but if you think about it, at its core, has to believe about data and predictive analytics in some form. So I don't have to fight that fight, which is nice. So the journey of leveraging data science and machine learning has been tackled for a while by basically digitizing the claims and application processes. So we're fortunate in that formed the basis of the proprietary data that forms the basis for many of our data science and machine learning models out there. But you're talking about challenges, right? So we have a nice portfolio of already machine learning and data science solutions that are providing value, mitigating risks, and increasing revenue. The current challenges, I would say, are more on the regulatory front. Life insurance is regulated on a state-by-state basis, so the probability of differing regulations happening are always going to be there. I'm not sure how the startups could help, but definitely engaging with the regulators, with the practitioners, as well as with the tech companies will help inform everyone about what the right direction is going forward. There's also a challenge of, because we use a principled approach for responsible AI, one of them is around bias and fairness. And to do that, you need access to privileged data, unfortunately, or protected data. So other than race, there aren't really any good approximations of other protected data variables.
How about healthcare data?
Healthcare data is part of that, but I'm talking about sexual orientation and other protected variables.
Yeah.
That would be great to have a reliable way to use that so that we could mitigate any bias further. Those would be our two most, the biggest challenges at the moment.
Got it. And if I ask Swarup in Wells Fargo, you think about your priorities in your organization or your demand for your services within your organization, what's some of the pain points associated with risk mitigation to address? I'm just thinking about the big Wells Fargo problem of 5 years ago with the credit card stuff that cost him his job. The CEO, I forget his name at the moment, but I see him at the Warriors game all the time on the front row. How do you think about that organization, risk mitigation?
I think the learnings from that incident obviously is the mindset is very much a risk mindset. We talk about several strategies around digital first, mobile first. I think we have started with that position of risk first, where as Rod was mentioning, the the first line and anything related to AI, ML, they have a seat at the table early and often. Like they are a part of our product discovery phase. I mean, typically if you think about most of the governance, they are like caught either halfway or towards the tail end, but now we are bringing that forward. And I mean, that's mostly an opportunity, but it's a challenge because I think we have to kind of think about how do you bring that in a way where bringing that forward is effective. I mean, we just don't want to do it for the sake of doing it, but how are they engaging it? And it talks about like, how are we enabling that by bringing the right, data, metrics, tooling, like all of those capabilities to make sure like that's a whole end-to-end solutioning right from the beginning. I think that's kind of where it's a challenge and an opportunity. And also bringing in all the regulations, just like how Rod was mentioning, it is highly regulated. It's state, in some cases, it's county specific as well. So we have to bring in all of those nuances and just embed that into things that are nuanced versus things that are, broad set of, functions that are repeatable. And that's how you have to think about building, business processes and supporting, AI or any other capabilities to support that. That's kind of how we are seeing it, right?
Okay, so risk mitigation is now top of mind, right?
I mean, that's kind of fully embedded into the DNA now.
Okay,
where
makes sense.
You will hear the current CEO, Charlie Schaff, talk about it all the time. When he was in front of the Senate, like that was the whole tone and tenor around like how we are kind of making sure like the risk mindset is front and center.
Okay, and if you're scouring around for technologies to improve your risk mitigation capabilities, what areas are you looking at?
I think it starts like, if you think about the highest levers, right? The three big areas that you can think about is how are we driving better client engagement, which is again all through digital. So how are we improving the digital experiences? That's where I think some of it would be overlapped with personalization. I mean, we want to engage, but it has to be personalized, contextual, relevant, timely, all of those things that are all driven by personalization. How do you do that in a privacy protected way? How do you do that in a risk controlled way? So that's kind of from a client experience standpoint. The same thing applies to, when I say client experience, it's as much as our customers as well as our own team members. Like how do you build that kind of a capability set that can work both for internal and external? Because that directly results in like better risk management and obviously has the operational impact of better time to market, low cost of operations. So it's kind of all interrelated, and it's obvious in the sense that like by doing better risk management, you will have all of these like knock-on effects. It's just that you have to frame it that way, and the incentives have to be built around that, and that's kind of what is happening right now.
Great. So let's go to Catherine then. I can imagine, certainly Web3 and everything, the need for KYC is more important than ever right now. As you're applying AI technologies to be better, everybody understands what KYC is, I hope. Maybe you better explain that. And how are you leveraging AI to solve better KYC capabilities?
To do a John style thing, how many people here know what KYC is? Raise your hand. Okay. Great. I'll do a very quick introduction. So banks and increasingly pretty much anybody needs to understand who they're doing business with, right? And so if somebody comes to a bank and says, I want to open an account, the bank needs to understand, they want to make sure you're not a Russian oligarch on a sanctions list, you didn't get your money through racketeering, any number of things, right? You're not, they don't have to treat you special because you're the mayor of your town, right? So all of those different things they need to understand. And that's essentially the KYC process. And one thing that's happened over the last couple of years is that all business and all of the financial institutions have really become more global, right? The world is coming online. We see a lot of emerging economies happening, and everything is more digital. So you end up with a lot of people from a lot of names, cultures, et cetera, who are going through this process, and companies need to be more global sort of from day one, and that's a real problem. But you also see that things are getting more digital. It's easier to do crime, for a lack of a better way of putting it. And so I think that's all being combined with the idea that instead of just checking somebody when they become a customer, there's a regulatory push to start checking them more often, right? This is sort of a continuous monitoring. And where we are as an industry is that without some kind of automation, this is physically impossible. There are banks out there that are applying, that have over 100 people who are checking individuals to make sure they aren't on a sanctions list, right? And this is not scalable as the global economy scales. So I think that's really where the problem space is, if that makes sense. So there's a couple of different things that we can do in the short term. Obviously, doing better at understanding who an individual is, and going out there and doing that. But I think on the flip side, we really need to do a better job at mapping sort of how people interact with each other and where the global influence and money flows. If we can look at news and we can say who is influencing which businesses, where are there connections between people. This is something called adverse media compliance. You don't need to worry about that. And build those maps out in a way that's less manual. That's going to be really helpful. But to do any of this, we're really going to need to give analysts superpowers, right? Because we need to give them assistance. Because if you go through it, almost everybody's not a money launderer. So, the false positive rate on this is incredible. And if you're doing some kind of internal communications compliance where you're looking for like people who are doing market manipulation, things like that, that almost never happens. So these are the two problems: false positives and training data that's ridiculously unbalanced. So there are two different ways of going about this. One is taking a look at what we can do both from an algorithm design and from a synthetic data perspective to be able to sort of map out the training data to be able to deal with these adverse sort of black swan events. The flip side of that is having computers help people make decisions. We do this all the time in customer care and e-commerce. There's this hybrid model. If there's a little bubble on the screen and you click it and you can talk to a customer service agent, that's half a computer, half a person right now. But in most regulated industries, there's no way to do that because there's a regulatory pathway for when a human makes a decision and a regulatory pathway for when a computer makes a decision. But what about both? And I think this is kind of a micro problem that is a part of an AI regulation as a whole problem. If we even think about something like, self-driving cars, we see the same problem, right? Who is responsible if something goes wrong? And I think we need to think about regulation from that perspective as well.
Yeah, that's very true. Kunal, you're venturing out with your new startup, and if you had to sum up your value proposition in terms of, are you driving more revenue? Are you driving more efficiency? Are you driving more risk mitigation? How do you, or leveraging personalization, what are you selling ultimately?
Yeah, so if I had to sum it up in just a couple of words, I would say, we are driving uplift for businesses, but we want to make sure we are protecting privacy at the same time. So to go a little bit further in detail, we think at Farasight that the future of e-commerce will be an entirely end-to-end personalized experience. So the way that you discover a brand will be completely unique to you. The way that you see a layout of a website when you go to shop somewhere will be uniquely laid out for you. The descriptions and images that you are presented when you're looking at a product can be unique to you as well. But if we take a step back and look at how personalization in e-commerce is done today, it's really heavily reliant on third-party cookies. It's really heavily reliant on knowing this is the exact person that is at my website, and we're seeing this increasing push towards let's protect user privacy. Let's pass CCPA. Let's pass GDPR. And what's really happening, it's paramount right now, is the deprecation of third-party cookies, which is a $100 billion user acquisition channel that's set to be disrupted next year. And so where we're starting at Farasight is really trying to fill that gap of this user acquisition channel, and we're doing so with our AI right now, which can predict based on the content of the current website a user is on, what this type of user is most likely going to be going to next as an e-commerce website. And so what we do is we make the direct link between these two brands, and the aim here is to provide a more continuous user experience while shopping online, while also creating a more effective customer acquisition channel for the brands as well. So that's really our starting point for personalization, and then we want to spread to some of the other areas I mentioned at the start of that.
Right, makes sense. Someone touched earlier on the small data problem for some kind of training models. When I think about Wells Fargo, I think of a ton of data. I think about all that transaction data that you either anonymize or whatever, but you know everything about everybody. It's just amazing. American Express would have that. But when I think about MassMutual, do you have that much data? Like, I just don't, what is your data? Is there a lot of data there?
So I mentioned that we went through a digitization of the historical claims and application process.
Okay,
right?
yeah.
But many of our use cases are, of course, some of them are at that core of underwriting and claims processing, but there are also many use cases related to stakeholder or policyholder support, marketing, branding, and some of those use cases don't have or don't necessarily need that much large data for them to be leverageable by machine learning. In fact, this whole movement, I think it was mentioned on a data-first approach to machine learning versus a model-first approach, is something that we see definitely happening at MassMutual. The other thing that we do is because we've built these great assets of the data science, working closely with the actuarial science folks, the original data scientists of insurance, and the track record that we have in terms of adding to the bottom line and mitigating risks. We're also commercializing that through a subsidiary called Life Sciences for others in our industry that may not have the same either data assets or data science capabilities.
Got it. No, it makes sense. Is there a world where banks would work with other banks and share data? Or that's just never gonna happen?
Data sharing, I think that's kind of already in place. So, but it's purpose driven, right? If you think about Zelle as a peer-to-peer capability, that is a consortium of banks that are actually doing that together.
Visa.
And then there's a new initiative that's again out there. It's called Peso, which is like the new digital wallet that again a consortium of banks are starting up, right? So there is data sharing, but it is purpose driven and specific to those kind of use cases.
Yeah.
And that is both transactional and I think analytics behind the scene to kind of improve that experience.
Right.
Could I add to that?
Yeah, please.
So this space of privacy-aware data sharing is definitely here and is definitely going to expand. It's needed in insurance because insurance companies are finding ways to engage in a win-win situation with their policyholders. If you're healthier, it's good for you. It's also good for the insurance company. So that requires an interaction and a sharing in a trusted manner, and there are some technologies that are really at the forefront.
I'm just imagining a world where my Wells Fargo account shows my gym membership. This person goes to the gym. Okay,
So I think if you think about the concept of open banking, that is exactly where that will lead to, meaning, again, I think the funny thing is like nobody wakes up in the morning saying, hey, I want to go do banking, right? They just want to go forward with their lives. So you want to kind of have banking embedded where everywhere people are. And we do have, secured data sharing agreements where we are sharing those data with partners, in a controlled way through open banking channels. Today we call that a partner B2B channel through which that does happen, but it's in a very controlled way.
What's your take on federated learning?
What do you mean by that?
Meaning is like, is that a must do, meaning the models come to you and stay with you, or is it, are you guys deploying federated learning platforms?
Not at this time, at least not with other peer banks. I think what we might be federating is at least within, let's say, a segment of a retail banking. I mean, this has several products where it's the same customer, where we have to be able to kind of at least get that federated models across deposit products versus lending products. I think that's kind of where we are in our journey. That's kind of to help us with deepening and broadening our engagement with existing customers as opposed to partner networks. I think the partner networks part would be more about, embedding the banking as opposed to like expanding a collective knowledge. I don't think we are there yet.
Got it.
I think federated learning has to be part of the picture in the longer term, right? I think even if we're looking at where federated learning is in something like with the potential for healthcare, with other places, what we're really doing is saying, hey, can we take individual tiny models of infrequent events at institutions, finding a way to put them together so we understand those patterns without being able to pull it back to the individual institutions, the individual accounts. And so if we're looking at pretty much any kind of phenomena around money transfer, be it new types of fraud, be it just general economic patterns, I think building something out where there was trust in the algorithm in order to share this anonymized data and get global patterns, I think it's got to happen. I don't know what the motivating event is to make something like that happen, or who would be sort of running that organization.
I think in the case of this federated learning kind of thing, since Catherine touched about fraud, Zelle scams has been a big deal. I mean, if you've heard of that recently, where again, collectively the banks are sharing knowledge and some patterns so that scams are like caught, because it's like the sending bank and the receiving bank both have to kind of tally things up before you can go back and say, hey, this is a scam versus a legitimate transaction. How do you catch that, right? I think that's being helped by this kind of a federated learning, but by both the parties being in agreement here.
Yeah. That's a great use case.
I have a follow-up question on that, actually. We talked at the front about risk mitigation and that being top of mind for your organizations. I think, when we start to talk about federated learning and having, individual models or learnings on devices or related to a specific user, how do you deal with risk mitigation now at that scale on devices versus, having a centralized model which you can perform these checks on internally?
So the device data, again, is a, from a personalization standpoint, it is getting to a place where it is considered sensitive. And what we store for some of the fraud detection is localized. We don't share that with others yet. But we are working with some partners to figure out if we can have some kind of a universal identifier that can be shared in a partnership model, but that's still in evaluation phase.
Have you seen anybody do that?
I cannot speak more about that.
There's an idea.
Yeah.
A big idea, yeah.
Yeah.
Right?
We are looking at it, but I cannot speak much.
Okay. Someone's going to do this in this room after today. That's a big opportunity. Well, look, we're going to wrap this up so people can get a little stretch their legs, have some break, and then we're going to move on to our next panel and stuff. And I think it was so good to see you guys, and hopefully you'll give them a lot of people here your one-on-one times, and I think it'd be terrific. We had a great federated learning startup in here somewhere, Dynamo FL, if you're around. But all good. All right, well, thank you guys so much.